Welcome to the Fun2000.com Real Estate Podcast. My name is Chuck Ham. Today's topic comes with an exclamation mark. Be careful buying foreclosures at auction. This is free advice about foreclosures that you must consider before you start using your cash at foreclosure auctions to buy real property. Once you purchase the property, it's yours no matter what mistakes you made purchasing the property. And the mistakes can be consequential and devastating sometimes. This is a huge subject and can get complex, but what we are going to discuss today can be summarized to just help you raise your own awareness and learn what you need to investigate, start talking to people about these subjects and investigate further so you can safely get into what can be a very risky business. One problem most people do recognize about the risk of buying property at a foreclosure auction is you usually cannot physically inspect the property you're buying. This is not a traditional real estate transaction. You're not buying this on the regular market where you have agents involved and you have inspections and disclosures. You don't have any of those benefits. Your physical inspection is most likely going to be limited to what you can see without entering the property. Most people know this stuff. Surprisingly, not everybody, even those who claim to be experienced, know this. Recently, I was talking to someone who represented themselves as someone experienced in trustee sales, and they said they thought properties were generally opened by the lender for inspection before the auction, but that's never been true in my experience. I can see where that might be true for some other kind of property auctions, but not trustee sales. And that's because it's a different kind of transaction. Most real estate auctions that have big discounts are trustee sales because they're risky. Trustee sales usually result from a non-paying borrower. They usually live in the house. They're usually not cooperative. These buyers are not happy about having people knock on their doors to inspect the property for a sale they do not want to occur, so they're not going to really cooperate with you. These borrowers often have to get evicted following the sale of property, which presents another risk and another cost for whoever acquires the property. Usually the foreclosing party will not even attempt to contact the borrower except for maybe to try to work out the debt. But you don't get to have a property inspection when for a property that you're thinking about buying at a trustee sale. But there's more, and this is what we really want to talk about today because it gets less intuitive. One problem many people do not recognize, but should because it's based on law that everybody should know if you're getting into this business, is that you need to inspect title. You also need to understand California law on title, on liens, foreclosures, and that's where it gets tricky. California is different than many states, but like other states, in that if you acquire title to a property through auction, a foreclosure auction, let's say on a junior lien, the senior lien does not get wiped out. If you're buying a property, let's say on a second deed of trust that is foreclosing, that means there's a first deed of trust, and that first deed of trust is still going to be there even after you buy the property and the foreclosure proceedings are completed, even after you get your trustee's deed. This means that in California, when you buy a property, you are also buying the liabilities that come with any senior liens. So what is a lien? A lien is an encumbrance on real property. It limits the rights as to that real property. A lien can result from many things. Usually people are aware of liens like trust deeds. In the world of trust deeds, for the purpose of this discussion, we have first trust deeds and second trust deeds, are also commonly referred to as first mortgages or second mortgages. It's all the same thing. The first mortgage would be the senior one, and the second mortgage would be the junior one. There could possibly be a third and a fourth. What other kinds of liens? We have mechanics liens. That could be a roofer who installs a roof on a house or commercial property, whatever kind of real property, and they've record a lien at the county because they don't get paid. Let's say the roof was worth $30,000. They had a contract for $30,000. They didn't get paid, so the contractor files a mechanics lien for $30,000 plus whatever their costs were in filing that lien, probably some interest as well. There's also tax liens. There could be HOA liens for members of homeowner associations who do not pay their HOA dues. So if a junior lien holder initiates foreclosure proceedings, you need to discover through an inspection of title which liens could be senior to your lien that you're buying. And you can inspect title by getting a title report. Title companies provide title reports. A title report was going to tell you things about the chain of title, who has rights to the property, who has filed a lien, what loans have been recorded against the property. These are common title scenarios and questions. So let's go into a fairly common scenario. Let's say you decide to get into foreclosure auctions and you are looking around, you find a notice of sale for a house you think would be a good investment for you. It appears the opening bid on the property is only, let's say, $50,000. The opening bid seems really low because you're looking at this neighborhood and the houses like that house in the neighborhood are selling for $800,000. So you start getting excited and you put together your money and you go to the auction. Then the auctioneer announces the sale, and as it turns out, the opening bid is not $50,000, it's $75,000, which is normal. Fees and costs will increase as foreclosure advances from one stage to the next. You'll start in the notice stage, and then you'll go to the publication and sale stage, and costs and fees advance from one stage to the next. It happens all the time. Most people new to trustee sales get this far with this kind of scenario by looking through publicly available records and using paid services, subscription services for, looking at notices of default. So you can find, these paid services help people find investment opportunities. But if this is all you got, if you didn't get any more facts than what I just explained, you're likely in for a bad surprise. Unfortunately, it's not uncommon to get this far without getting more important facts, critical facts, and developing a better understanding of California foreclosure law. So what's missing? What did we not get so far? First, you need to know if you're buying title to the property subject to any senior liens. If there are no senior liens, that's great. That's ideal. That means you'll be able to get this property free and clear of any senior encumbrances or liens. You don't have to pay anybody else off or make payments on any senior mortgages. That's ideal. Also note that any liens junior to the lien you are bidding on get wiped out. A senior lien is generally one which comes first in time. So assume, for example, you have a lien securing a note for $500,000 that was recorded in 2018 and another lien securing $75,000 in 2019. Which one has priority, or in other words, which one is senior? Well, the one which is recorded first, in this case 2018. The lien holder for the 2019 lien made their loan or acquired their lien knowing that there was a senior lien. So you see how that works. They know, they accept the risk. In this case, let's say you win at auction through your bid at an auction, foreclosing on a second deed of trust on a property. But if you didn't get a title report, you might not have discovered that there was a senior lien, probably a first deed of trust. Even if you did get a title report, you need to make sure you know how to read it because they're not super intuitive. I would seriously consider getting an attorney to help you. You really need to understand this stuff because when you buy that property, you are buying it subject to all the rights of anybody who's recorded their own interests against the property. For example, senior lien holders. Let's say that senior lien or deed of trust was recorded to secure a first mortgage loan for $500,000. And let's say the payment on that loan was $2,500 per month. Even if you purchase this property through foreclosure on the second lien, and you think you got this awesome deal at $75,000 for that second lien, you'll hopefully soon discover the first lien holder still has a right to receive payment on their $500,000 debt. If you buy that property, you can make the payments to said first lien holder, the $2,500 per month. But if you don't make those payments, the first lien holder will declare a default and initiate foreclosure proceedings, and then they'll wipe out whatever rights you acquired through your foreclosure action. But let's say you think you can rehab the property in 3 weeks and put it back on the market for $800,000 and get it sold super quickly when the new buyer buys the property you acquired for only $75,000. You aren't going to get the difference between $800,000 and $75,000 because that $500,000 lien still has to be paid. It didn't have to be paid at trustee sale because you purchased the property subject to that lien, but the new buyer is going to want to buy the property free and clear of all loans. You could put the property on the market subject to the existence of this first $500,000 first lien, but that's not common in our market. You would have to make disclosures and probably get consent of that senior lien holder. There are a lot of factors to investigate. The issues I'm mentioning here are by no means complete or intended to be relied on, though I'd be happy to get into specifics of any particular transaction you are considering. How do second liens and junior liens result? Why do they exist? Why is this even a problem? Well, because we have loans against real property all the time, especially when there's equity on property. The most common example is when a homeowner gets a home equity loan. Those are usually done at some point after the homeowner has equity in the home and the bank is offering them some really low interest rate loan, and they want to access funds maybe to remodel the home or something like that. Then they get into financial trouble later and quit making payments on that second loan. They usually continue paying on the first mortgage for whatever reason, but they decide they can or have to quit paying on the second. The lender that made that equity loan would then decide to foreclose because they aren't getting payments, and that would be a junior lien holder. So the lesson here, to summarize, is get title reports, learn about senior liens, learn about the law, don't do this alone, and that buying property at auction is risky business already. Make sure you understand every aspect and every angle. Talk to people, talk to an attorney or a real estate broker who has experience in this stuff, not just any real estate agent, because most don't know all these little details. I work in the foreclosure business and would be happy to work with you on buying or selling foreclosures. Despite my experience, I still talk to attorneys all the time so that I can make informed decisions and advise my clients properly. And I think you should do the same. Thanks for listening.